Okay, so there is something huge going on right now on the Ethereum network. We're talking about a traffic jam of absolutely epic proportions, and it's pretty much being caused by one single very powerful player. We're going to break down exactly how one company's aggressive strategy is creating a multi-billion-dollar backlog, and more importantly, what it all means for the future of Ethereum. Let's get into it.
So let's get right to the heart of it. Why is there over $8 billion worth of Ethereum just stuck in a line? It's not a glitch. It's not some kind of bug. Nope. This is the direct result of a massive, unprecedented surge in demand, and it's causing a major slowdown across the board.
And this number, this is what that slowdown actually looks like for you, for the average person. If you wanted to stake your ETH today, to help secure the network and earn some rewards, you'd have to get in line and wait for, get this, over 44 days. A month and a half of just sitting there before you can even get started. It's kind of wild.
And the reason for that insane wait time? Well, it's because there are over 2.5 million ETH all waiting in that same line. That's the digital equivalent of an endless traffic jam, with everyone trying to merge onto a highway that only has 1 or 2 on-ramps open at a time.
All right, so here's how we're going to break this all down. First, we're going to look at the logjam itself. Then, we'll meet the giant whale that's causing it all, BitMine. After a quick detour to understand how staking actually works, we'll dive into the great supply squeeze, what all this means for you, and finally, take a look at the very uncertain road ahead for Ethereum.
So, first up, the billion-dollar logjam. Let's really dig into the symptoms of this crazy, unprecedented queue.
What's happening right now is a total 180-degree flip from what we saw just last year. Seriously. Back then, the line to get out of staking was the long one. Now, the line to get in is the longest it's been in years, and the exit line, well, it's practically empty. That tells you there's been a massive shift in how people are feeling, with a huge move towards holding for the long term.
So, who exactly is at the front of this massive line, causing this whole jam? Well, let's meet the whale. It's a publicly traded company called BitMine, and what they're doing is a huge institutional power play.
And you don't have to guess why they're doing this. Tom Lee, BitMine's chair, lays it out plain and simple. They're not just looking at staking as a way to support the network. No, they see it as a colossal revenue stream, to the tune of over $1 million per day. I mean, with that kind of incentive, of course you're going to stake every last bit of ETH you can get your hands on.
Now, this chart, this really puts their sheer size into perspective. BitMine, just one single company, holds nearly 3.5% of the entire supply of Ethereum, and their stated goal is to get that number to 5%. That's a level that really starts to make you think about network influence and centralization.
And let's be clear, this is no small-time operation. We're talking about a financial heavyweight. They're sitting on nearly $13 billion of ETH and have already locked up more than $5.6 billion of it in staking. This is a company backed by titans like Peter Thiel and Cathie Wood, and they're strategically parking a huge chunk of the network security all in the hands of one single entity.
Okay, to really get why BitMine's actions are causing such a massive backlog, we got to take a quick technical detour. We need to understand mechanics of the road itself. So how does Ethereum staking actually work? So Ethereum runs on what's called proof of stake. It's kind of like this. You lock up your ETH, almost like a security deposit, and that allows you to become a validator. Your job is to help process transactions, create new blocks, and basically keep the network secure. And for doing that work, you earn rewards. It's a really smart system, but it has its limits.
Think of it like this. It's like going through security at the airport. The network can only onboard a certain number of new validators at a time to keep everything running smoothly and securely. So what did BitMine do? They basically showed up at the airport with a massive tour group of like hundreds of thousands of people, and they're all trying to cram through the same TSA line at the exact same time. It just grinds the whole system to a halt for everyone else.
So let's zoom out a bit and look at the bigger picture here. How does BitMine's big move fit into a much larger trend that's happening? Let's talk about the great supply squeeze.
Now, BitMine might be leading the charge, but believe me, they are not alone. This chart shows what's really going on. It's a broad institutional trend. Publicly traded companies are now holding over $19 billion worth of ETH in their company treasuries. This isn't just a quick trade. For them, this is a long-term strategic move.
So here's the crucial part, right? When all of that ETH gets staked, it's effectively taken off the open market. You can't just go and buy it or sell it easily on an exchange anymore. This reduction in the available or liquid supply, that's what we call a supply squeeze, and it can have a really big impact on price. Okay, so we've got institutions rushing in, we've got supply getting tighter. What does this all actually mean for the average Ethereum holder? For you? Let's break down the good, the bad, and why you might need a little bit of patience. This table really lays it out. So let's say you're already staking your ETH. The good news for you is that your rewards are probably going to be more stable. The bad news? If you need to get out fast, you can't. Now, what if you're planning to stake? Well, you've got that crazy long wait ahead of you. But the flip side is, this whole situation shows massive long-term confidence in the network. And for everyone else just holding, this supply squeeze can help support the price by reducing panic selling. But it also brings up some very real risks about centralization, with so much power in the hands of just a few big players.
And that brings us to our final section. You'd think with this huge vote of confidence from institutions like BitMine, the future would be crystal clear, right? Well, not so fast. The immediate picture for the market is actually anything but clear. In fact, it looks totally divided.
And here's the divide right here. It's fascinating. On one side, you have the long-term holders, the bedrock of the community, and they're actually starting to buy again after months of selling. But on the other side, you have a different group of whales, these massive individual accounts, and they've dumped nearly $800 million worth of ETH in just the past 5 days. I mean, you've got two completely opposite strategies playing out at the exact same time.
And we have to throw in a little bit of caution here. While some of the network numbers like active addresses look incredibly strong on the surface, some researchers are warning that it might not be what it seems. There's a chance this activity is just sophisticated spam, something called address poisoning attacks. It's basically attackers creating a bunch of noise on the network to try and trick people, and that noise can easily be mistaken for real, genuine growth.
So, that leaves us with the big, multi-billion-dollar question, doesn't it? Which of these powerful forces is going to win out? Is it the long-term institutional lockup led by companies like BitMine, or is it the short-term whale exodus? Right now, nobody knows for sure, and the road ahead for Ethereum is anything but certain.